Hi everyone, this is Rob Roy of Elliott Options, and welcome to this trade review of our recently closed trade ID number 170 on ACN. It was a long call, so straight call within our impulse strategy. So you can see that we were in the trade for 14 days and returned just under 44% over those 14 days. The entry date was on January 22nd, so we click and look at the particulars. Here's the chart on the entry. You can see that we were in a wave 5 of a larger 5-wave Elliott wave pattern, and pay special attention to this tap box here. That's where the two horizontal lines are with the dotted line going up in a 90-degree angle, and then this vertical line with the date on it. It stands for time and price projection. So again, remember that. Coming down here, looking at the DMI, we had separation regaining between the two directional indicators after they had met there in early January. You can see quite often they come together, I call it they kiss together and then move back the other way. And that's what happened here. And then we also had the ADX looking like it was trying to curl back up. It was between the two directional indicators, looking like it was trying to curl back to the upside. Remember, the ADX moving to the upside means that the current trend is gaining strength. It's not a directional indicator. In other words, if the ADX is going up, that doesn't mean the stock's going up. It means whatever the current trend is gaining strength. So if it's a downtrend, it would be gaining strength. Now I prefer to see the ADX back over here like it was in November, where it comes from underneath 20 and breaks up to the upside. But nevertheless, it did look like it was trying to regain strength. We had a really good wave 5, so the setup was there. So 14 days later, we'll take a look at the chart. I can show you what happened. Our exit date there on February 6th. So notice that that tap box disappeared. Now the reason for that is we moved outside the time frame. Remember, there was 14 total days in this trade, and the date on there, if you remember the tap box, was February 4th, and we exited on the 6th. So we had moved outside that time frame. Not a big deal normally, in the fact that, in my opinion, from the world of technical analysis, the time aspect is by far the most difficult, especially when you're dealing with Elliott wave, because corrective patterns form. Now, once the corrective pattern begins to form, you have a great idea of what's going to happen, but you don't necessarily always know when a corrective pattern is going to form, and that sometimes takes a little bit longer. So we're outside that time frame, which is a concern, but main thing is look at the ADX. The ADX just fell down over that 14-day time frame, losing that strength that it looked like maybe it was trying to give. So we had the two directional indicators come back together. The DMI just became a mess. So we had an opportunity to take that nearly 45% gain and close the position out. 2 weeks, 45%. All in all, not a bad trade. I did want to show, I like to do a little of the Monday morning quarterbacking to see where things went, and you can see that the next trading day on Friday, we did move to the downside. So at least for now, looks like a pretty good exit. And following the indicators, one other thing to mention is we ended up with this gap here that occurred to the upside on the 4th of February, and we know gaps get filled. So that's another concern, and also was into the mix of why we decided to exit when we did. I hope you found that interesting. Look forward to talking to you again next time. Take care, everybody.